Dinshaw Irani. I've been meeting him over the weekends also. Not planned, unplanned. Where is your umbrella?
Don't need one.
I never bought one and rains have come. Now I need to buy one. How was the movie? I'm assuming it was Mission Impossible you went for, right?
I'm not a Bollywood kind of guy. I came for a Hollywood movie. Sorry, I'm not a Hollywood kind of guy. I came for a Bollywood movie. So, Pune Highway,
Oh,
done by
okay.
a friend. So I had to go
You
to
know, I
watch.
wanted
It
to
was
send you
good.
a message when I saw you entering into the movie line that what happens to Tom Cruise in the end. Glad I did not do it.
Waste of time.
So what's happening to markets, my friend? I mean, the market suddenly is lacking any trigger. All the good news is out in the open. The bad news has suddenly drifted away. Even the concerns around monsoon and rain, that also has been addressed 2 weeks ahead of the suspense.
Yeah, actually, Nikunj, very interesting the fact that everything positive has come out. The negatives are also there to overweigh those. I mean, the tariff wars are out of the way, hopefully. I mean, let's see how it pans out on 9th of July when the final results come out from US. But looking at the results season, our results season per se, doesn't look that exciting actually. I mean, fundamentally, if anything, we've just deteriorated over the December quarter. Still, downgrades are happening. The upgrade to downgrade cycle is definitely in favor of downgrades. The earnings for the index are getting cut. Valuations today, I mean, as we stand today, are probably touching the kinds that you saw in September of 24, right? So we are somewhere close to that peak valuation that we've been, and unfortunately, there's no earnings growth to support those valuations. I know it's always a bad idea looking at the review and driving a car, but let's even if we look ahead, this year itself, I mean, I don't think anybody is projecting a low double digit kind of growth for earnings in the index. You're talking about a high single digit kind of growth, and that also is looking at optimistic number given the way we've entered this quarter. Because I mean the June quarter, because the earnings transcript or the calls that you hear from the management and bulk of them are done, they're not sounding, it looks a very dull quarter as such. And mind you, September last year was the quarter when you saw negative earnings growth. So maybe you'll see some kind of uptick from the September quarter and definitely not the June quarter. The only bright uh, lining that we see, I mean, this in these skies, dark skies today, and actually they are dark skies right now, is probably the interest rate scenario. Given what US is going through, I think India has got a free run to cut down on interest rates. Trump is definitely looking at devaluing his own currency, so India doesn't have a problem on the INR front. Yeah, so they can be aggressive in cutting interest rates where the inflation is very much in check with monsoons in play. I think the rural inflation also will be the one which will be coming off quite sharply. So I think RBI has a free run, and that's the only silver lining. But otherwise, fundamentally, things don't look that exciting today.
All right. Hi, Dinshaw. This is Shrishti also joining in. Things don't look that exciting, but I'm sure some themes must be looking exciting to you because the last time you connected with us, you highlighted that financials and power as a space are looking good to you. Give us the latest sense on these and any other theme that you're picking up at this point in time.
So, Shrishti, power space, I think, will take a breather, according to us, because I mean, you all along we've been calling out that there's a scarcity of power and supply of power and stuff like that. But with the summer season coming off so appreciably, I mean, as in a very short summer season, I think there's a surplus now happening. So maybe you'll see a breather in that space. However, in the financial services, I think we are on track. I mean, interest rate cuts. Obviously, RBI is looking at increasing supply in the system, which was a big constraint for the banks per se, and interest rate cuts, which was a big overhang for the NBFCs. I think these two sectors are going to do fairly well. Banks may suffer a slight compression in NIM because of the cuts in interest rates, but that I think will be overcome by the way of the demand going up for credit per se. And in terms of NBFCs, I think they are perfectly placed because they play both sides. I mean, both legs of the balance sheet are on short cycle basis. So even an interest rate cut will be a beneficial one for them going forward. So these two remain. I mean, this sector remains fairly strong, and going forward, I mean, we remain negative on IT. I think that relief rally which came about looks like done and dusted. FMCG again, don't see much of upside. Maybe there may be some demand uptick because of the rural inflation going down. But apart from that, I think the downtrade is going on happening on the urban demand front. Don't see again much of upside happening out here. So things are not that great overall. We continue to be fairly comfortable in the hospitality space. Again, as I said, that the quality rooms are not available, and that's what is putting up the our ARRs of the particular sector. Hospitals, again, derivative of hospitality, if you will, but the same thesis applies out there because, again, quality rooms are not available for healthcare, and that's where we remain comfortable as such.
So hospitals and hospitality, these are two themes you're bullish on.
Yeah, apart from NBFCs as such, and obviously the new age companies.
And new age companies expensive? I mean, and now they're struggling also. Zomato, there is competition. For policy fintech, new platforms are getting created by existing insurance companies. Paytm is out of the woods, but MDR is still an issue, how much more they can make. So when you say new growth companies, what do you like there?
So basically, all these guys you talked about is what we have in our portfolio. We like them. Having talked about that, quick commerce is the only area where you're seeing competition coming in for the likes of Zomato, right? Or Eternal, if you will. But the fact is that even in quick commerce, I mean, you've seen the competition, right? They've been cutting off people. They've been cutting back on their expenses. So, I mean, if you take the example of a Meituan in China, it seems like it's not exactly a winner take all, but winner wins it all kind of market as such. So I think that is what we are playing on in India. And hopefully, I think Eternal being a stronger candidate out here and Zepto being a new kid on the block, I think the worlds are very much in favor of Eternal. Having said that, I'm not calling out any buy call out here. I mean, we are invested in this, so we are quite comfortable with the valuations, even looking at the future, right? Secondly, I mean, the likes of the fintech companies. Again, you may say that the MDR issue is still an overhang. Yes, it is. But look at the way that company has come out of all the mess that it had gone through. Right. I mean, if anything, I think the comfort that we take away is that there's a strong management in place, and obviously, fintech is the way forward per se, because these are the guys who are gonna be the future in the country, and you've seen that across the globe per se. So that's why we're comfortable with these kind of names. Also, apart from that, we have names in auto space, which are platform companies. We have names in pharma, which are platform companies. So it's not only these three that you mentioned; we got quite a few others also.
Dinshaw, give us your take and latest take rather on autos, because you have been bearish on the sector overall for quite some time now. But some experts are highlighting that maybe it's time to look at the two-wheelers. Do you agree with that view? And overall, how do you see the demand trend shaping up? Any pocket that is looking attractive?
So actually, we are. I mean, we've been forever fairly negative on auto space. Two-wheeler, in fact, we turned very negative very early in life because we saw the EV really cannibalizing the demand, rather the growth in demand in the two-wheeler space. But I think that space is now stabilized, and the stocks that we are in, we were only one two-wheeler stock, which is into your entry-level two-wheelers. Plus, he's got a massive portfolio for exports as such. So that is where the comfort level lies. And it's no secret, actually, it's Bajaj Auto, because we already disclosed this in our portfolio per se. And that is what we're comfortable with, because I think the tariff wars will finally start targeting the high-end, the premium bikes and stuff like that, if at all it comes through per se. So that's why we are away from the high-end bike manufacturers, and that's where we are. So
Bajaj has
in the PV
KTM.
space,
Bajaj has
we continue.
KTM, Bajaj has EV, Bajaj has three-wheelers. I mean, they are a very different kind of a mix. So I'm just trying to understand that you like Bajaj Auto because the stock is down, or they're gaining market share, or you like their exports, or you like their EV. What is the
No,
story
so
in Bajaj Auto?
okay, so basically everything. I mean, KTM is obviously one thing that they were forced to acquire. Literally, I think. I mean, they didn't have a choice there. But that's a minuscule part of their overall turnover. I think the bigger kicker here is the fact that EVs they've done fairly well. Secondly, they have entry-level two-wheelers, which only one other competition is there, and that also not that big. It is big, but not that. It's gaining market share, Bajaj Auto, if anything. And obviously, the way the SOPs were given out in the budget, I think that's what triggered our view on Bajaj Auto. And obviously, it's not 100% domestic. It's 50-50 literally, right? So 50 exports. And there again, Africa is doing fairly well for them. So I think that market has done fairly well. So there's an insulation happening. If India doesn't do well, the other parts will do well. So that's what's making us go towards the likes of a Bajaj Auto.
All right, Dinshaw. But other than that, Dinshaw, what's been your biggest key takeaway from the earnings season? Give us some sense that which sectors are looking great as a long-term story and which sectors are looking exciting to you and you would like to track more on the earnings front.
So, okay, definitely, I think I told you about our preferences. One area where we've been, I won't say underweight, we've remained there is defense. I think that area is looking fairly interesting, but unfortunately, most of the stocks out there have gone through the roof in terms of valuations. I mean, peak valuations, not even peak. I mean, they're way beyond the peaks that they earlier had as such. And that is one area that we've been tracking fairly closely. And frankly, I mean, that all comes because the way the prowess that we showed in this limited war with Pakistan, I think that technological prowess, which is homegrown, is what really made us sit up and be aware. We've always been calling out that India can be a sourcing base for defense. I mean, globally, the defense spends are moving up, right? I mean, with Trump coming in, obviously, the EU also has to start spending much more on defense per se. So, and the only supplier can be a very friendly nation who doesn't show aggression. And I think that's where we came from on defense. But having said that, I mean, as I said, the valuations have gone through the roof. So that's one area that we've been tracking fairly closely. And I think if there's some semblance coming out, and frankly, our call on the market also is a time correction. We don't see a price correction happening. We see a time correction happening. And frankly, that is needed for the market to digest what's happening. I mean, the sharp rally that one saw, and obviously no earnings growth kicking in. So you need to have some semblance coming through. So hopefully you'll see some buying opportunities in that space going forward.
Dinshaw, so good having you on the show. Thanks as always for your time.